A lot of what we've talked about today has been on the fix and flip side and then the transactional side for wholesalers. Are you doing any lending for the BRRR investors that are more
Yeah,
the portfolio guys?
yeah,
You-
yeah.
okay.
So we'll do both sides of BRRR, right? Because the
Okay.
front side of BRRR is really a flip.
Flip. Yep.
It's a flip that you're just not
Sure.
selling, right? You're just going to refinance. So a BRRR is really the same as a flip. It's a renovation type loan just to get that done. Do we have long-term financing solutions on the back end? Of course we do. Depending on where we can put the loan, because every deal is a little different and not every loan fits in every single lender's box that they want to lend on.
Sure.
So sometimes we have to do, a rehab type loan to get the thing done, get it renovated, get it prepped and ready to go. And then we have to do a new, say, 30-year fixed loan, usually referred to as the DSCR loans that are out there now. Sometimes we can actually roll, depending on where I can place the capital behind the scenes. Some lenders will allow me to actually convert from that renovations loan into a 30-year fixed product without incurring a lot of the extra fees that you would get. There's still some fees to do the conversion, but it's a lot less expensive when I can do it. Now, again, it doesn't work for every single scenario, but every chance we get that we can set one up that way, it cuts our commission, but that isn't the main motivator, right? The
Right.
main motivator is let's get the deals done because that's how we work together. And, it's almost like the Walmart thing, right? We'll make it up in volume if we can just
Sure.
work together for a long time.
And from that lender's perspective, is it they already have the deal acquired and they already have their interest in their pipeline, and is their thinking there that it's a stable deal and they're happy to convert it, or what's their thinking on not getting the restructuring and the extra points and the extra fees? Why would they do that?
So in general, we'll forget about the fact that we can convert it in house and think
Sure.
about it just from like what happens in the regular world for a
Mhm.
second. When you have a loan with a lender, doing any kind of refi is easier than doing a purchase in every single scenario. Why? Because there's already a loan in place.
Sure.
Because what goes on inside of a lender's head is the risk is lower for me to refinance this because someone else has already gone through and done a ton of the due diligence and determined this is a smoking hot deal. So all they're really trying to do is buy the loan and get it into their portfolio.
Got it.
So, and most people probably don't even notice it, but yet I know everybody knows this. Like, go to the bank and say, "Hey, I'd like to buy a flip," and then look at how deep they're going to dig into your world to give that to you. And then when you get done with the renovations and you go back to the same bank and you say, "I'd like to refinance," look at what they don't ask you for the second time,
Sure.
right? So it's the same thing, except now the lender is at a much lower risk because they're refinancing their own loan.
Got it.
Right? And so that's what's happening. They're not trying to buy someone else's loan. They're just restructuring their own
Got
and
it.
converting because it's new paperwork, right? Because it's not a short-term loan, it's long-term. So, but it's a lot less work. It's a lot easier. It's a lot less risk. And so they can cut the costs and they can cut the timelines.
Got it.